This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, start today's show with two segments as they discuss the international and domestic grain market. Their first segment focuses on wheat and the U.S. dollar. Then Dan and Guy continue their conversation in the second segment, talking about transportation, corn, soybeans, and sorghum. Ending the show today is K-State meteorologist Chip Redmond with a weather update. He explains how Kansas is currently out of the drought and what the forecast may look like. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen, for a grain market update. Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
Starting off our conversation, Dan, as we normally do today, with what are futures looking like?
Well, following Wednesday's WASDE report, we've had some movement in the futures. The closes yesterday on Thursday the 13th were with corn being up about 4.25 cents. July corn at 458, D's 476. Soybeans, July soybeans 11.89 and a half, up 12 cents. So here you had the first day post report, you had corn up 4 cents, beans up 12.25. November up 13, 11.60. Wheat just so. July contract closed at 6.36 3/4, down a half cent. And when you look at the trends of where we're at, so you've got the July corn futures market basically right at 50% RSI, which means it's basically just not large momentum going up or down, and but has come off of lows recently about last week and a half. Down, it was down at 440, so up about 458. And really for soybeans, we've taken a more negative approach, more negative trend of late for beans than for corn. We had traded on the July contract down as low as, say, just about 11.75 or so. Closed on Thursday 11.89 and a half. So we've been bouncing around in a range of about 11.75 to 12 for about a couple of weeks. So that's indicative of where that's at. I think the market's anticipating, even with questions, still a sizable soybean crop coming out. And I would say for wheat, we've been in a downtrend for sure, and Guy will talk about this more when we look at wheat and the international factors at play. But we had traded up as high as about 750 over the last couple of weeks, and now for hard red winter wheat futures on July closed yesterday at 6.36 3/4. And I think we have harvest coming on, and generally anticipation of sizable crops. The RSI running at about 445 or so, just a bit negative. And for soybeans, RSIs, again, just around 50. So it's interesting time in the markets. And I would say cash-wise, from the last time that you and I had talked, Shelby, corn basis does continue to strengthen a little bit. And here we get into, we've got the strongest basis in Southwest Kansas and Northwest Kansas at the lead markets that we've seen for weeks and weeks. So we do see that occurring. Still a decent basis for sorghum. Not a lot of change in that jumps out at you for the rest of the commodities. Although the strongest basis for soybeans around the state, Topeka and Hutchinson, both 25 under. So, that's indicative of perhaps of some export interest out there. For wheat, gosh, we're coming into harvest. And it is interesting that the strongest basis bids, Salina 11 under, Topeka 16 under, 6 under in Hutchinson, but you go out into the western part of the state, 50 and 66 under. So, it's harvest time, and I think we've kind of switched over now to, yes, we're interested in international issues in the wheat market, but But with harvest coming on, we'll have it. Whatever we get, we're anticipating some crowdedness, some glut type stuff in parts of the state, and that, of course, affects basis and bids.
And taking a deeper look at that wheat market, Guy, what are we seeing on the international front?
Well, international markets, just might comment on domestic wheat by class to start off with here. The USDA numbers wheat by class won't come out until next month, but we did see hard red winter wheat production forecast at 726 million bushels. That was slightly above the trade guess of 724. Soft wheat came in at 742, with trade guess below the trade guess of 353, and white wheat came in at 226, well below the average trade guess of 287 on that. So it'll be interesting with a softer finish. I would sort of anticipate improvement in protein premiums out there as we look at that. But I guess the big movers in that wheat market was probably in the world, changes in the world number. USDA pegged this 24-25 season wheat production at 791 million metric tons, down 7.4 million metric tons from last month. It's up slightly from a year ago, and still a record crop, even though they lowered that down. Just to run through the range of countries that we're looking at, Russia's been key with their weather issues they've been having there. They're coming in at 83 million metric tons, down 5 from last month, and down 8.5 million metric tons, or 9% from last year. They also lowered their export projections by 4 million tons to 48, as we expect those exports to decline coming out of Russia. Right there, their neighbor at the Black Sea, their forecast was at 19.5 million metric tons, down 1.5 from last month, and down 3.5 million metric tons from last year, which was at 23 million metric tons. Exports were down 1 million compared to May at 13. So we should see less wheat coming out of the Black Sea in this coming marketing year. Moving a little farther west into Europe, crop production came in at 132 million metric tons versus 130 last year, so that's up 2 million metric tons, with exports up 1. Basically, we expect to see less feeding in Europe, particularly as that wheat-corn spreads a bit. Wheat's at a bit more premium to corn than it was in the last marketing year. Canadian production unchanged at 34 million metric tons. Australian crop unchanged at 29, but exports lowered slightly to 22. The Argentine crop was increased by 500,000 tons to 17.5. Exports were left unchanged, though. China, which is the second largest wheat producer in the world, their estimate was unchanged at 140 million metric tons, with imports at 11. I suspect those imports may work their way a little higher, but we'll sort of see. But I'm sort of suspicious that maybe that China crop's not as big as what we think, and that'll be reflected, particularly on the quality side, and that'll be reflected in some increase in exports. That leaves us world ending stocks for this coming marketing year coming in at 252 versus 259 from last year. As that's sort of dropping down, that's tightening up our ending stocks to use down to 31.6 million metric tons versus 32.5 last, or sorry, 31.6%
percent stocks to use, right?
Versus 32.5% versus last year. And I didn't run the less China numbers there, Dan. Did you happen to run those?
Yeah, we're down to 18.5, and again, that continues to move lower all the way through. Guy, before you move off that, this what's happening over in the Black Sea region, what's happening in Europe, what's happening in China, all point to weakness in the supply-demand picture for wheat. Do you have any thoughts on that from what you observed through IGP?
Yeah, I'd sort of agreed with that. Country consumption is near that record consumption as well as production. The thing is, I think we're seeing some demand rationing on that, is particularly our if you put wheat prices, any of the commodity prices in overseas currency, it is still relatively expensive. And there's a number of importing countries that are run their in-country stocks down, running them at a minimum, and they're experiencing that food inflation at a significantly higher rate than what we're seeing here in the U.S. And I've got to believe that's having an impact on demand.
If I can just throw one more question at you on the wheat. The U.S. currency, value of the dollar, transportation costs, all are working against the U.S. in terms of being a competitive player in the world export side. Any thoughts on that?
Yeah, a bit of I won't call it a bright light, a dim light in the foreign exchange this week or just yesterday. The U.S. Federal Reserve announced that they're only likely to see one increase in interest rate by the end of the year. And I'm a bit probably may call it optimistic or pessimistic, depending on where you're thinking about it. I don't think we'll have an interest rate. I think inflation is still fairly sticky and persistent. Also, being an election year, I don't think they'll do anything before the election at the risk of being accused of being political. And that bodes well for not inflating the U.S. dollar against other currencies quite as quickly on that, and maybe it ought to help bring a bit of demand back into the marketplace.
If I could finish up real quickly on the domestic side, the USDA did raise up its estimate of exports by 25 million. 25 million bushels up to 800 million here in the U.S. and tightened up stocks to use down to 39. But you can see what's happened in the wheat market. 2 years ago in 22-23 marketing year, we had basically 30.4% stocks to use, $8.83 wheat. The 23-24 last year, what we just finished up end of May, 37.5% stocks to use. So we increased that. Price dropped to $7, and now 39.4% stocks to use, $6.50. But by the way, the 6.50 from this report to last was up 50 cents. So there's some action in the wheat market and some underlying risk.
Yeah, well, this whole global transportation issues kind of helping the U.S. out a bit, particularly with the disruption at the Panama Canal. That hasn't fully recovered. We're in the rainy season, and I would expect it to be approaching normal by fall. And we can talk about that after we get back from the break.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation. You're tuned back in to Agriculture Today, and we continue our show with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Guy, at the end of last segment, you mentioned continuing your conversation about transportation, and what do you have to tell us?
Well, we're still seeing restrictions at the Panama Canal. Generally, they transit 40, 45 ships in a normal year. That's dropped below 20. It's starting to recover a bit. We're in the rainy season in Panama, and hopefully those water levels in the lake will rise to put us back to a more normal situation by fall. In some extent, that's helped to support the U.S. exports of wheat. In the U.S., we don't have to take the long way around, either going around South America or Africa. We've done that by raising the basis values for wheat on the West Coast and railing a bit more grain west rather than the Center Gulf or Texas Gulf. And I think we'll continue to see wheat particularly move west to those Asia markets to satisfy that demand rather than to move Texas Gulf. By corn and bean harvest, hopefully that'll be sorted out and it'll raise the rate basis values across the whole grain belt. Just to mention the Suez Canal and Red Sea situation, that continues to frustrate things, particularly for wheat out of Europe and the Black Sea, as they're basically taking the long way around to get to those higher valued Asia markets. And we had a few instances here there just this past week, which is just really delaying or extending those routes in that dry bulk market.
Getting back to starting to talk about our crops and continuing our conversation with corn.
The domestic supply-demand balance sheet had no changes in it. There's still a lot of risk there, and here we're sitting in now mid-June, and really, if there are going to be changes in that cause on the supply side, it'll be in the next 90 to 120 days. So stay tuned, I guess. We did not see any change, and again, just like for wheat, you can see what's happened in stocks to use and prices the last 3 years. They just go opposite here. At 22-23 domestically, 9.9% stocks to use and basically a $6.54 price. Then we went up to 13.75% stocks to use, 23-24 down to $4.65. And now, again, the market's assuming large yields, no problems, and that may come out, that may not come out. But as they sit right now, projection about 14.2% stocks to use, prices at $4.40. So you can see the stocks to use, and and the prices going different ways. I would say we are seeing a decent pace of corn exports, about a neutral one for this marketing year yet. And this year will end August 31st. So we're watching on that, and the world stocks to use down to 25.4%, and that'd be the lowest we've seen at least since 2017, 2018, and world less China stocks to use 10.8%, and that'd be the lowest since basically 2021. Guy, have you any thoughts on the international side on corn market?
Yeah, interesting. They actually lowered last year's ending stocks, increasing this year's beginning stocks for the coming crop year, 24-25, which would sign things are tightening up a little bit better than what they had expected. Global coarse grains output's supposed to be an estimated 1.51 billion metric tons. And of that, we've got 1.22 billion metric tons will be corn. Both of those numbers are a bit higher. Just looking at the countries, we'll start with Brazil here, Dan, with Brazil estimated at 122 million metric tons by the USDA. I think you've got some numbers there for CONAB, and there's a discrepancy there. You want to expand on that a bit?
But just quickly, it's the same thing you and I and Shelby have been talking about all the way through, that the USDA is saying 122. CONAB came out this morning, raised their number up to 114. So there's still a discrepancy, and I don't know, Guy, what your thoughts are. I would not be surprised that over the next several months we'll have basically a process of convergence to see if they meet in the middle, or if the South American crop numbers come up or not. I still think, Guy, and I throw this to you, this is a big deal. That's, about 8 million metric tons differential. Even if you meet in the middle, we just got done talking about how tight world stocks are projected to be. And let's say you take half of that down. Well, gosh, you're starting to ration usage on the world side. Thoughts?
Yeah, just might extend that on to Russia and the Ukraine. Next year's Russian crop for 24-25 was reduced slightly, 600,000 tons to 15.4 compared to 16.6 last year. Ukrainian estimate was up about the same amount, 700,000 tons to 27.7, but that's 3.3 million tons below last year. So we're seeing tighter crops in both those countries in corn as well as in the wheat situation. Really not too much other to add on that. Import demand for Southeast Asia is unchanged. China is still holding at 23 million metric tons of corn imports for both this current year and this coming year. And I think that's about right. I like to be optimistic that might reach a little higher, but I think 23 is probably a pretty good number.
What are we seeing on the side of things for soybeans?
A small change in this projected year's marketing supply-demand balance sheet for 2024-25. Again, this marketing year goes to August 31st. We did see a little bit lower crush for soybeans of 2.29 billion bushels, down from basically 2.3, so a small amount, but still the U.S. usage picture still predominated by crush. Exports are important. The USDA is projecting from 1.7 billion bushels exports this year to go up to 1.825. And really, given what South America has plans and hopes to do, that number is probably pretty much a bullseye target for South America, that they're going to work for that not to happen. So it's going to be interesting to see, again, the new crop balance sheet, 52 bushels an acre, record yield at or near record yield. And again, same issue. We're now in the next 90 to 120 days going to see whether that holds up. And if it does or not, it will have a lot to do with where prices end up and go. We're still at 2 marketing years ago, we were at 6.1% stocks to use, $14.20. Last year, 8.5% stocks to use, down to $12.55. This year, up to projected 10.4% stocks to use, down to $11.20. So again, we've got this overall issue going on, Guy, where we're having larger crops, starting to have that play into the market's considerations. And I would say the projected world stocks to use for next year, 31.9%. If that happens, that'd be the highest since back in 2018-19. And world minus China stocks, whereas this year projected about 28.6%. Looking at what's expected for Brazil next year, South America, up to 32. And of course, all that would bode pretty negatively for soybean prices.
Yeah, they're getting much more comfortable in the soybean situation. That said, China, who's importing 2/3 of the world's oil seeds, their number pretty much unchanged this year with imports at 105 million metric tons. That's a jump to the highest level ever, with their crush just under 100 million metric tons at 99. Next year's projection for China is to import a record 109 million metric tons, with their crush climbing up to about 103. So we're expecting to see good demand continuing to come out of China, which always keeps us optimistic on that. Did Mike touch base just on Brazil? They're pretty key. Their crop is coming in about 169 million metric tons, and CONAB has some different numbers for Brazil there as well, Dan.
147. So these are not trifling differences. Something's going to give on that. And I think we're sort of like a ship sailing to say, well, whatever's out there, it'll work out. But man, there's some differences that are going to have to be reconciled. There'll have to be a convergence on this, and that'll be part of what we'll be looking for in upcoming reports.
Well, that'll continue to provide a bit of underlying market volatility as we go forward when you have that divergence of views out there. So that's not all bad.
And just giving a quick update on sorghum.
Sorghum tends to have up and down weeks in terms of exports. This year was a great week. This last week, the week ending June the 6th, over 7 million bushels, that we were down to about 2 last week, the week prior to that. So it jumps up and down, and 245 million bushels projected by the USDA for this year, and we're about 80% of the way there in terms of quantity, about 79% of the way through the marketing year. So grain sorghum is a big crop out, is an important crop out here in Kansas, western Kansas in particular, western and central, and we've seen a pretty good year of prices, and I guess I don't see anything changing that, Guy. It all comes back to the country you used to work in back in China in terms of their sorghum demand. Any comments?
Yeah, no, I just continue to be optimistic about sorghum demand into China. One of the biggest drivers of that is the differences in the import taxes on corn versus sorghum. Even though it's a premium to corn here in the U.S., it's still a discount to corn in China. So I think that'll continue to lend support as long as the government doesn't change their view on that. So I continue to remain optimistic on most of that. All that export volume and a good volume of total U.S. production will continue to move that direction. If we get some improvement in the international shipping and freight situation, that should add to those basis values.
And China sees sorghum as a food input,
yes.
Right?
Well, the biggest chunk of it goes into the food, or the Baijiu market particularly. You enjoy very, very strong grain alcohol, but it works into a number of sectors over there, so that's good.
Dan, Guy, I appreciate you both taking the time to join us today and give us our grain market update.
Thank you very much, Shelby.
That was K-State grain economist Dan O'Brien, and he was joined by the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, we've seen some moisture this past week.
We did see some pretty good rainfall across the state this week, and mostly the US 50 corridor and just northward, with the focus of Friday through Sunday. They saw a lot of rain in a short period of time. For a lot of places, it ended up with some flood warnings, especially around Reno County and then further to the east. But just in the last 7 days, with that rainfall accounted for as well, we saw some areas with over 4 inches of rain in parts of Anderson County and westward to Chase County, and then even into McPherson County. As you got further west, the precipitation amounts dropped off a little bit, but we still had over 2.5 to 3 inches of rain in areas of Hodgman, Pawnee, and then even some 1 inch plus down there in Finney to Greeley County. So it was a much needed rain for a lot of those folks. Unfortunately, as you get further south along the Oklahoma border, not quite as much rain to almost none over the last 7 days. And same as you get further north, there's some areas there along the Nebraska border, especially northwest, north central, that didn't get a whole lot of rain this week. And then it's thunderstorm activity, so the heaviest rain is typically isolated, but a good amount of moisture that did result in some drought monitor changes this week. We got rid of the extreme drought in the state of Kansas that was mostly focused around that Pawnee County area. So we have no extreme drought now in the state. And we also really cut down the severe and worse drought with over an 8% decrease in severe drought and a 10% decrease in moderate drought. So some good changes. We even saw the rare 2-category improvement. It's very, very rare that we see an area, this was in central Kansas, they went from severe drought to no drought at all because of this rainfall event. So some longer-term implications came from that rain event. Soaked some good amount in the ground. We also had some good runoff, so we best of both worlds, and we need to enjoy it because we're entering summer, and our average precipitation starts to trickle off slowly every week.
What combination of weather have we been seeing that could be creating some extra stress for crops?
Over the last several days, temperatures have escalated quite a bit. We've honestly been pretty cool over the last several weeks, at slightly below average, especially with our high temperatures. Our overnight lows, not so much, but our high temperatures have been cooler. And that's really resulted in not a lot of stress for crops. However, with these warmer temperatures, we saw hundreds get reached in multiple different places, mostly in the northwest and north central part of the state. Unfortunately, that came with wind, and it came with low humidity. We've had humidities down in the teens with those 100-degree readings. And with breezy winds, that really increases the evapotranspiration and moisture loss from the soil, both through vegetation and just evaporation in general. So I just get concerned when we see days like this. It's not abnormal, but we start stringing together a couple of days in a row. We've really increased the moisture demands for vegetation. With the cooler weather and decent moisture availability in some areas, the roots may not be developed fully down in crops, and we could start to see some increased stress pretty rapidly. And if we can get a week or two of this kind of weather, which right now it's possible, it's probably not the highest likelihood outcome, but that would kind of send us spiraling a bit in the other direction pretty quickly, and we could see flash drought rapidly develop in areas that missed precipitation recently and have increased days of these breezy winds and low humidity combined with these very warm temperatures.
Chip, and what can we be maybe expecting as we look forward?
Yeah, as you look forward, it's a challenge. We've got high pressure that's building in. It's shifted off to our east now, and we're going to be on the edge of that high pressure. And so that'll allow some chances of storms. But when that high pressure shifts east or west and focuses over the state, things are going to dry out and be very, very warm. So we're kind of in a very vulnerable pattern right now where we could see routine amounts of storms, or we could be routinely dry, and just small scale shifts in that pattern lead to high vulnerability as we look at the forecast out the next 7 to 10 days.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.